what's the next? Oh my God, it's him. We don't want this one on, do we? This is financial modeling in Power BI, the final session of the whole event. And it's ironic that I'm ending up. I know Tim started off this event, can come in, and he presented the first one. It's just how it's turned out. I basically filled in the slot that no one else wanted to go through. So it was financial modelling in Power BI. I feel a bit strange actually introducing myself here, so it's a bit weird. So I'm not going to read the whole spiel that you can see on speakers, but look, I've been doing this for over 30 years. One day I'll get it right, and I'll eventually write a piece of code that Charles will approve, for instance. But my experience has been in financial modeling, development, auditing, valuations, M&A, strategy, training, consulting, working all over the world, making sure I can stuff up teams with the best of them. I've broken WebEx, Teams, and Zoom today, so I'm quite proud of myself. I've done the holy trinity today. As you're aware, I run with Tim and others here. We've got Sam. Sam, thank you very much for staying on. And there's been Talia and Riki and Catherine and Oscar in the UK been running this through the night. It's making it easier actually, because the first times Tim and I had to go through the night on this, and so it's not been so bad. Although I think Tim's been on it most of the time anyway. I'm a regular contributor to many of the accounting press around the world, including AICPA, Chartered Accountants in Australia and New Zealand, Certified Practicing Accountants Australia, Chartered Institute of Management Accountants, the Institute of Chartered Accountants England and Wales, and many more. And I've written quite a few books now on financial modelling, usually with 2 L's. And it was with that in mind that I had this idea of 2 or 3 years ago about, isn't it time we thought about other platforms? So last year, I was lucky enough to win the inaugural award for the Financial Modelling Institute's Lifetime Achievement Award in financial modelling. And I thought, well, it sounds like I'm going out to pasture or something and clearing off. And I think, I'm not going to do that. So what I'm going to do here is think about what's next. And for many of us working in banking and finance, we are creating these financial models in Excel, and then we're importing them into Power BI for graphical interpretation and further analysis. Now, that's not what I'm looking to do here. I'm going to build the model in Power BI. Now, I can't stress how far off the range I'm looking to take the horses here, because if you're listening to this session and you're interested, then you are a true pioneer. That's all I can say. I know of 1 or 2 IT programmers that have had a go at this in the past, where they built the odd financial statement in Power BI, but I haven't seen anyone do all 3. And if you have, let me know, because I'd be interested. The power of it is, if I can build the calculations for financial statements in Power BI, then I can produce statements by product, by customer, by geography, by whatever the level of granularity and the dimensions I've got. So don't get me wrong. There's nothing wrong with building financial models in Excel. This is just the next step. We're talking here about from evolution to revolution. So it's just a way of going forward. Now, we're going to forego the charity video because we'll wrap up with that at the end. So what we're going to do now is I'm going to ask Sam, if he wouldn't mind, to play this final video. And at the end, I'm going to introduce, I think Catherine's going to come along, who's had a big impact in this. So Sam, if you're ready, would you mind playing the financial modeling in Power BI video? So you may or may not be familiar with my previous work. I've done books such as An Introduction to Financial Modelling and Continuing Financial Modelling, which have been done in Excel. And these weighty tomes covered how to model in Excel, but time's moving on. What I want to say is I want to talk about Power BI, Microsoft's self-service business intelligence and data visualization tool. It's becoming more versatile and more powerful every month. What I want to do is show you how you can build a financial model in Power BI. That is connecting the income statement, where the profits are, with the cash flow statements, how you're spending your cash, with the balance sheet, which is a state of your net worth at a point in time. If we can do this, we can drill down on different things and show customer profitability. We can look at asset management. We can look at cash flow per month, per particular product. Those sorts of things that you can't do in Excel because you just don't have the dimensions. And that's what I want to try and demonstrate here. They say if you're going to introduce a brand new concept, then you should start with a key executive summary, i.e. start at the end. So, I've always wanted to say this. Here's something I prepared earlier. Let me explain what I've got here. I've got an income statement, a cash flow statement, and a balance sheet. These are my outputs my three-way integrated financial statements. Now, I always thought that was a bit kinky, I suppose, a bit like double entry. That's what attracted me to accounting, and then I found it was not what I thought it was, but that's a story for another day. Anyway, I've got here the income statement and the cash flow statement and the balance sheet. The balance sheet's down below. Normally you put the balance sheet second because the income statement and the balance sheet were known as the primary statements. But I've put the cash flow statement in between because when we actually build this model up from scratch, obviously I don't have time to do it all in this session. You sort of go in the order of income statement, cash flow statement and balance sheet. But that's a story for another day. So we've got here an income statement. You can see over to the side, I've also got a gross margin, which is currently set at 40%. The gross margin being the percentage of gross profit you get when you divide it by revenue. So it's saying 2/5 of the revenue is my gross profit. But we can go further with this. If we put this into Power BI, you can see here, I've got showing at the moment 2021, and I've got quarters 1, 2, 3, and 4 showing January to December. But if I've done this in Power BI, yes, you can sort of do this with a sum if and things like that in Excel, but I can actually expand all down one level in the hierarchy by clicking these buttons, and look, it's breaking it down by day, or I can drill up and go into the quarters of the year instead, or even the years themselves. Isn't that powerful? And of course, you could always drill down on particular products. You could also drill down on particular geographic regions. Or this, I could go over here and do what if analysis and pick 60% or 70% for my gross margin. And not only will the income statement change, it would actually affect the cash flow statement and the balance sheet as well. That's pretty cool, don't you think? Yes, you can build these financial statements in Excel where you can actually have the income statement, the P&L, the cash flow, but you've only got so many dimensions that you can actually change. You can write funky formulas to use with sum if and things like that to collapse and expand as you see fit for particular things, but you can't drill down in as many dimensions as you can in Power BI. That's the point here. That's the issue that I'm trying to make. And I've got in here all three. And I can build these matrices. You can see here I've got the balance sheet down at the bottom here just to prove it's here. And it balances. I've got my total current assets, non-current assets, giving me my total assets, and my current liabilities and non-current liabilities, giving me my total liabilities, giving me net assets. And you can see this balances with the balance sheet. And you can put this all together in Power BI. Now, matrix visuals aren't necessarily the most used things in Power BI, and they can be awkward to put together, as I'll show in a few minutes. But you can make your numbers look all beautiful here, and people say, oh, red font lines, how do you do that? Well, that's what I'm going to do with this particular session now. I'm going to backtrack. This is the end. I've got these things. You can see that we've got the cash flow, the balance sheet, the P&L all put together, and I can change the things, and the balance sheet will still balance. But I can build it all up from scratch. Now, obviously, I don't have time to do all of this in 40 or 50 minutes. I just don't. Even with a recorded video like this, unless I've got it on fast forward, and then no one's going to be able to follow it anyway. But what I want to do is I'm going to give you some key salient points, starting at the beginning and doing a bit to show how you put this together. And pretty much I'm going to build up the revenue, the cost of goods sold, and the gross profit, and show you how it all comes together using something called control accounts as well. But I'm getting a bit ahead of myself. Let's go back to the beginning. Now, to do this, I'm going to have a quick demo file that's got various tables in it. And if you actually have a look at the Power Query editor I'm displaying here, on the left-hand side in the Queries pane, you can see various tables in here. We've got source data down here towards the bottom in one of the folders. This is a reference source data query that subsequent queries will reference. Now, I'm not really going to be able to write a dictionary anytime soon. We've got actuals. This is the table that houses all the data, all the actual and historical data that we're going to use to interrogate and produce our measures and produce our outputs. There's other tables that are in here for completeness that we're not going to look at here, but are essential for building a financial model, such as depreciation, dividends, and equity. We need a calendar table with contiguous dates so that we can do time series analysis. And we've got two other tables in here, control account measures. It's a housing table for control accounts measures, which will become clearer in a minute or two, and financial statement measures, housing the table for the financial statement measures as we go through. Now, what you've got here at the moment is a picture of a parameter we've already put in. We've created a file path parameter, which has got the current value of, excitingly, c:\source data.xlsx. We can change it if we want to. Now, Let's be clear here. Source data is a building block to create other queries. It's not going to be used in the Power Query data model. And so to avoid using unnecessary memory when loading the data to the model, I have right-clicked on this already so that we are going to uncheck the enable load setting, which is why it is italicized and it's the first thing in here, just so that we're clear before we go any further. Let's move on though and think about creating parameters, and I'll show you three quickly to just put together so you can see what's actually going on in here. And the way we do this is we go to the Home tab and click on the Manage Parameters button up here, and there's a drop down. We can go Manage, Editor, etc. We're just going to click on Manage, and it brings up the Manage Parameters dialog, and we can click New, and we can name things. And this is what we're going to do. We're going to call it P. The P is a highlight to actually show its parameter, and I'm going to go for Days Payable. It is required, and I'm going to actually have this as the data type. I'm going to go down here and say there's all these different types I can have in here, but the one I want is decimal number. We are going to have a current value in here of 40, so a suggested value, it can be anything, but we're going to go for 40. So I'm going to create days receivable. So again, P underscore days receivable, spot the pattern. Again, we'll make it a decimal number. We'll have a current value of 45. Now let's just be clear what I mean by this now. What the days payable meant actually was to say how long it was between receiving a bill and paying it. Days receivable is a case of how long it takes between actually making a sale, invoicing, and getting the cash in. So on average, I'm going to say it's this number of days, and you can vary it, but we'll have a starting value in here. All right, let's put another one in now, and we're going to have something called P underscore sales code. Now, the P underscore sales code is a parameter that's required because we've got in the actuals table, we've got the account codes, and the revenue account codes in here are going to have the account code number 1000. So we'll bear that in mind as we put the parameter together. So in this one, though, interestingly, just to add confusion, because this does catch people out, I'm going to assume the account code field, even though it's got numbers in it, is actually of the text data type, because it's important to get the data types right. So I'm going to go for a text. So that's what we'll put in here, and we'll have a current value here of 1000, which is what it is. So once we've done those three, we put them in. I'm going to click OK. It's put them in at the bottom in the other queries section of the queries pane. And look at it as well, it's put the numbers next to it of what the present values are. So we've got P days payable of 40, P days receivable of 45, and P underscore sales code 1000. I'm just going to drag them all up and put them into the parameters grouping. And notice as well what I'm doing here is I'm right clicking so that I can actually not have them italicized, but I'm going to enable load so that they are loaded to the model because I'm going to need them. And then we'll hit close and apply and bring them back into Power BI desktop. And lo and behold, they're all in here. Let's create our first measure. So I'm going to click on the new measure button. And then what I'll do is I'll go into the formula bar and type in sales equals, and then I'll just put on the next line, start typing it in and get calculate to bring this in. So I'll go calculate as expression for context modified by filters. And I'm going to go for sum for an aggregation. We're going to go down to our actuals amount is what we want to sum. So that's going to be our field. And the filter we're going to put in here is, if I just click down on the next line, is going to be for the actuals account number equals, and I said before, it's the code number 1000. Now notice I'm putting 1000 in text because I told you it is a text data type, but I've already created the parameter just a moment ago, P underscore sales code. So I'm going to use that, which is doing exactly the same thing as saying I've got 1000. Now I'll put a close bracket on the fifth line. Final, just do the tick just to make sure it's all happy. Notice it puts this into the actuals table. Let's put it there. We can change it to somewhere else should we wish, and we're going to move it to the control account measure table, as you can see in the top left hand corner in the home table. So it's moved it to over there. And so we're housing our control account measures in one place. I'd already got a placeholder measure in here. Now I'm going to insert a matrix grid, which I'll just make a bit bigger so we can see it, and just centralize it here. And I'm just going to drop my sales measure in here. So I've got 178,609.12. Now I'm going to go in here and drag my date hierarchy from the calendar table into columns in here, and you can see I've got 2021, 22, etc. in here, and I can drill down using these buttons to expand further and further down, so I can even go down to the month, etc. I'm looking here, I've got quarters and months, and it's all looking good. Right, let's create another new measure anyway. So that's the first one sorted out. So my next measure I'm going to put in here is going to be called sales cash receipts. equals. And then what we're going to do this time, it's going to be another calculate whenever we're doing things out of context. So it's going to equal minus the sales. So this will all become clear while I'm negating in a moment. And then we're going to go and use the date add function. So what the date add function does is it adds or removes number of days, weeks, months, quarters, whatever. We have to have a date field for it, and we always use calendar date. So that's a date field in the calendar table, which has got all the consecutive contiguous dates with no duplicates in it. That's what we put in here. And what we're going to say is we're going to go minus P days receivable. So what it's going to do is it's going to go back the number of days receivable, and we put comma day in to parameterize it so that we actually have the number of days receivable we're looking back. So if it's 45 days ago, it would mean that we are looking back 45 days ago for the sales. If it was 40 days ago, it'd be 40 we put in there, because it's saying go backwards with it negative for the number of days, and if it was a positive number, it would mean look forward. And it doesn't have to be day for that third argument of date add. It can be a month, it can be quarter, or year even. So we've got those in here. Then we close the brackets, and this is giving us our sales cash receipts. And we'll just drag that into the matrix as well, and you can see we get the sales cash receipts and sales next to each other. And I'm just going to click on the format button in here. First of all, I'm going to turn the subtotals off as we're creating our own totals. So I'll just turn column subtotals and the row subtotals off, and go down to the values section and just scroll down here and say, actually, I want this on rows. And that makes it a lot more sense now. It's more like a pivot table type approach, which is what you want for the matrix. We've got sales and sales cash receipts in here. So they're the actual numbers for those periods. Now, what I want to do next is I want to create some running totals. So I'm going to go and add yet another new measure. So back in we go again, our third one so far. So we'll go to a new measure. And this one is going to be, we're going to work out our cumulative sales. This will become clear why we need this in a minute. Equals. Yet again, we're doing this out of context, so we're going to start with the calculate function, and we're going to use the sales measure, hence we don't need to actually put the table name in, so it's just sales in square brackets. I'm going to use the filter function to filter, and I want to first of all bring back all the dates in case any of them have been filtered out for one way or another. So it's all calendar dates, so everything in the date field of the calendar table. And then what we're going to do is we're going to say, right, this is going to be subject to the fact that the date field in the calendar table is less than or equal to the maximum, so we'll use the max function, of calendar date. And what that's going to mean is all dates less than or equal to the calendar date that's in the matrix there. So that's what we're doing here. And then what we'll do is we'll just close our brackets twice, put it and house it in the control account measures table. And then I'm going to make a copy of this particular measure because I've got to do another cumulative one for sales cash receipts. So having done that, create new measure, go in here. I've just pasted it in, Control V, and I'm going to change the name from sales cumulative to sales cash receipts cumulative. The calculate this time is not going to be on the sales actual measure, it's going to be on the sales cash receipts, but then the rest of it's all the same, so we can go and tick the little arrow again, and we've added these two new cumulative measures in here, and you can see that they've both been put into the control account measure table over on the right hand side, and I'm just dragging those into the values section in the visualizations pane, and you'll see that's populating the matrix. So we've now got in here, so look at that, quite a populated matrix, and no Keanu Reeves in sight. So we've got sales and sales cumulative next to each other, and sales cash receipts and sales cash receipts cumulative next to each other, so it becomes clearer how they've been summed up, and that's why we've needed to do these. Now knock those out so you can see what they're there for. So we've got just the sales and the sales cash receipts. And let's create yet another measure now, another new measure, and this one's going to be called sales opening receivables. So this is for the balance sheet. So let's just be clear what this is. When we go for the balance sheet and the control account, what a control account is it actually tells you for the balance sheet, which is where you're basically showing your assets, your liabilities, and your equity. What we're going to actually look at how a control account works, which is saying, right, I'm going to have this is my balance sheet number for last period, and then I've got my movements for the period, which tend to be in either the P&L, the income statement, or the cash flow statement, and then we have our closing balance to end with. For sales, what's going to happen here is we're going to have started off with our opening receivables or debtors, what we're owed. We're going to have a sales for the period, and then we're going to have our cash receipts received, assuming no bad debts. That will give us our closing receivable. So that's why we're putting in here, we're creating our actual opening receivables. So let me carry on here, just going through. So we're going to hit calculate, and I'm going to go in here and look at my actual measures, put the square bracket in. It's going to be sales cumulative plus, and then I'm going to put my sales cash receipts cumulative. So they're the numbers I was showing you before. That's why we needed them. And that's going to be, we'll go here for the previous day. And the previous day of calendar date. We always use calendar date as our actual date field because that's the one we've marked as our calendar table. And we close that. So that's going to give us our balance up to and including yesterday. And that doesn't matter whether or not we actually are doing this for a monthly model, a weekly, a quarterly, whatever. We always want it for yesterday, the final day before, because this is something that's got to be calculated on a daily basis. It will cause problems otherwise. And some of the measures we create in the financial model really do need to be constructed on a daily basis. But more on that another time. Guess what? We're going to do another new measure. Guess what this one is? We're going to do depreciation. No, we're not going to do depreciation. It's going to be sales closing receivables that we're going to do next. It's going to be sales closing receivables equals, and this is simply going to equal the sales opening receivables, the first line, plus sales, plus, can you guess what's coming next? Sales cash receipts. That's right. Oh, you must have done this before. And so we drag that in here. And we have a control account here where we've got our opening receivables plus our sales, less our cash receipts. Now you can see why it's negative, and we can see we've got it looking and making sense now. Time to do some housekeeping now. We're presently in report view, so I'm going to go over to the left-hand side now and click on the model view icon, which will take us to where all the tables are. And over on the right-hand side, we've got the fields pane, and I'm just going to click now inside the control account measures table and select sales, sales cash receipts, cumulative, sales closing receivables, sales cumulative, and sales opening receivables in order to create a folder. So I'm going into the display folder part of properties, and I'm going to type in here 01, and we'll call this sales measures. So we've got all of these together. It's really birds of a feather flock together, so we can find these when we have loads and loads of measures in here. Now, with them all still selected, I'm going to format them. I'm going to go down to the format section. Now, at the moment, I can't change from general to custom. I have to change first to a format which has a format mask. I'm choosing currency here, and then I move to custom. Well done, Power BI. It's nice to try and make things a little bit more awkward than they were before. Great improvement. And then I'm going to put a custom number format in here that I have prepared together earlier. Now, this is the same whether it's in Excel or Power BI. You can see here it's hash, comma, hash, hash, etc., etc. And it's got two semicolons in there, which basically these are delimiters that segregate between positives before the first semicolon, negative numbers between the first and second semicolon, and 0 after the second semicolon. So hash, comma, hash, hash, 0.00 before the first semicolon is how to format positive numbers. The hash is a special character, says put a number if you need one. The comma says put a thousand separator if you need one. And the noughts mean put a number anyway. And the way we use noughts for 0.00, well, if you imagine the number 0.7, that would appear as 0.70 in 0.00 notation. Whereas if it was hash point hash hash, it would appear just as 0.7. See the difference? Between the first and second semicolons, we've got the brackets hash, comma, hash, hash, 0.00 again, so it just means put brackets around it. Notice it doesn't have a color there because we can't put colors in the number format, but more on that in a second. And after the second semicolon, we've got the dash for zeros, and the backslash just means the next character is text. And yes, I admit it is superfluous in this point. So this is giving us our formatting. Once we've done that, we can go back to the report view, and you'll see, lo and behold, sales cash receipts in the third row have gone negative with the brackets in them. They were negative before, but they just look prettier now, prettier. I'd like to make them red though, please. So what I'm going to do is I'm going to go to the formatting and the visualizations pane, and I'll just close this values section and scroll down to cell elements and select it to be the one that's negative here, which is of course sales cash receipts, and then to font color and click on advanced controls, and it gives us the font color sales cash receipts The format style defaults to gradient. I'm going to change this to a rule-based approach, and we're going to say if the value is greater than or equal to, and I'm going to change this from 0 to min, and that just means if it's greater than or equal to the min, well, everything's greater than or equal to the min, so it just means that one's going to disappear altogether. I'll change it from percent to number, and then it's less than 0. Well, that's the bit we want. We want if this number is less than 0, and if this number is less than 0, we click on red, click OK. Voila! We have red numbers with brackets for negatives for sales cash receipts. Incredible. Let's just sit back and admire what we've got here for a second. This is our control account for sales. As I said before, sales opening receivables plus the sales less the cash receipts gives us our closing receivables, i.e. so what's owed at the beginning of the period plus what's come in gives us a total so far. Then we deduct the cash that comes in to give us what's owed. So let's have a look through. For Q1, January, we have $599.40 worth of sales, no cash receipts, so we're still owed $599.40, which will become the opening balance for the next period. The 2097.90 in February there is the sales to made, and we received $239.76 in cash receipts, and that gives us our closing total of $2457.54, which moves on to the next period and so on. Now, the opening receivables is purely the closing receivables from the previous period. That's why we do the -1 day measure. Remember when we were doing that calculation? That's why we've got that in here. So we don't need to put that into our financial statements. If we put our sales figures into the P&L as revenue, if we put our cash receipts numbers as positive numbers into our cash flow statement, and if we put the closing receivable balance into the balance sheet, it has to balance. And that's what we're going to do when we create our outputs, our financial statements. We'll put those numbers in. So we've got these measures. They can just be put in there and the whole thing's going to work. Excellent, eh? Now look, just before we get too carried away, let's just finish off and make this a little bit prettier. I want to get the column headers, so I'm clicking on column headers in visualization, and I'm going to change the background color to more colors, and FFFF is often how I feel when I'm doing modeling. So we'll put a different hex number in here. I'm going to go for 007, license to kill, of course, 033, which is a nice kind of Excel greenish sort of color, and also some product color that we have in here. So that's made all the column headers nice and green. And I'm going to make the font color less imaginative white. Looks good so far. The other thing I want to do is change the grid line. You'll see it's kind of blue color at the moment. So I'm going to just go in here and I'm going to change that color from blue to the James Bond number coloring is 7033 again, which is just what we want. You can choose your own colors. It doesn't matter, but that's just the idea of what we got. So we've got this nice looking control account, and that's how we're going to make all our control accounts look when we build our model. Okay. So now we've done that, we can move on. And the thing I want to do next is actually make this a bit clever by putting an actual line in. At the moment, I've got sales opening receivables, sales cash receipts, and sales closing receivables, but you don't necessarily realize that the sales closing receivables is actually the summation of those above. So why don't we put a kind of like a line in, which is always a bit awkward. And here's a neat little trick that we do. Now, if anyone knows a better way, feel free to tell us. We're going to use an asterisk measure, and I'm going to go for asterisk equals, and it's a very exciting measure, open speech marks, space, close speech marks. So it's actually going to show nothing. Brilliant. Wasn't that? I think, Liam, that was one of the best things ever. I'm going to drag it down so it's between sales cash receipts and sales closing receivables. Then I'm going to go to formatting, and in here I'm going to go down to the specific column section, and I'm going to choose the asterisk. And I'm going to change the background color to black, and you can see, lo and behold, it makes it a line. I also need to apply it to the header, and then it will put it in the other part as well, and we now have a line, so it makes it look clearer that it is actually a line total that we've put together. It's just a little trick that we use to put these lines in because we find the matrix visualization a little awkward to work with otherwise. Okay, let's move on. Let's go and click on the Home tab on Transform Data to take us back into what I call the Power Query Editor. And I'm going to go down to the source data section, and I'm going to make a reference, which is basically make a copy of the source data where it's not going through all the applied steps, but it's using the source data as the start of this thing. So I'm not having to do all those adjustments before. So it's not making a copy, it's referring to the source data table. Once I'm in here, I'm going to look at the gross margin table on line 5. I'm going to click the table word in the data section, which will actually expand it out. So we will see the gross margin table. If I click on here, I want to actually change the type from decimal number. I want to make it percentage, and I will replace the current so I've got fewer steps, and I'm going to rename it. It doesn't need to be source data 2. That's a bit boring. I'm going to call it gross margin instead. Once I've done that, I can go and close and apply, and I can go back into my report view. So it's just going through, it's loaded them, and we have a table. And we'll now create another new measure. And if we've done the gross margin, I suppose we ought to create a gross margin measure. Might be a good idea. So gross margin equals, and as always, it's got to have an aggregation if we're referring to a field. I'm going to use max because I don't like David. And it's going to be max of the gross margin field. So there you go, one of the most exciting measures ever. Gross margin equals the max of gross margin. Yes, perhaps I could have got a little bit more imaginative with my fields, table names and everything else, but you know, if you can't have confusion, what can you have? Move that to the control accounts measure place in the home table. I'm going to have another new measure now. So let's create another one. And I'm going to call this COGS. And COGS stands for cost of goods sold. So these are the costs directly related to the sales. So these are the actual costs that are occurring when you make a sale. And the gross margin is actually your profit divided by your sales, where the profit is calculated as your sales less your cost of goods sold. So we're working backwards to get our cost of goods sold. So that's what we're going to do here, and it's going to equal, in here we're going to go back to the sales measure we created earlier, and we're going to multiply it by 1 minus the gross margin we've just calculated as a measure. And it's the measure we want, close brackets, we can tick on that, and we have our cost of goods sold. Amazing. So we've got 2 of those now. Right, what I'm going to do now is copy that visual, so I'm just going to tidy these things up a little bit, so I've got a little bit more room. I'm just going to right click on there, have a second version of it, so I'm not having to do all the formatting again, and I'm using the guidelines to just get it snapped to grid to be underneath. And I'll just remove half of these measures in here. I want the asterisk one in here because I want my line. I spent a lot of time sorting that out, but I'm going to drag in the cost of goods sold measure that we had before, so we've got that in there. And now I'm going to insert a slicer. So I'm going to use this to select what my gross margin will be. So selecting the slicer, I'm then going to go into my gross margin table, and I can just check on it, or I can actually drag it into a field if I want. And I'm going to then go in here and change the presentation type to a list by clicking on that drop down in the right hand corner of the visual. And you can see now, because we're taking the max, we can select different things like, I don't know, let's go for the 0.4, the 40%. That will show you what happens if you select that. Or you can go for 0.6, that will give you 60%. So it's selecting different gross margins, and you can see how that is impacting the cost of goods sold. It's not having any effect on sales, obviously, but it's having it on COGS. I'm just going to resize the slicer and move it up here next to the other matrices. I can also change the way that the gross margin is displayed by selecting the gross margin field in the gross margin table, and I can change the formatting up here from general to percentage. That's looking better. All right, let's do another new measure. So back in, click on new measure. And now we're going to actually do something very similar to what we did before. If you remember, we did sales, and then we did sales cash receipts, and then we did the 2 cumulatives of those so we could work out the sales opening receivable, then added them up to get the closing receivable and so on. We're going to do the same thing for the payables. So we're going to now calculate our COGS cash payment. Then we're going to actually work out COGS cumulative and COGS cash payment cumulative to get our opening payables, and then we can work out our closing payables. So it's more of the same. So let's start with COGS cash payment equals. So as always, out of context, it's going to be calculate. And then we're going to put in here a minus again for the reason that's become clear now, because we're going to be deducting it in the control account, the COGS measure, and then comma. And then on the next line, we're going to go to date add again. We're going to say, right, we need to work this all out. So this is going to be calendar date because we want the date field. And it's going to be minus P underscore days payable this time. So we want to look back the days payable number of days. And that's why we're selecting as the third argument the day. So it's saying, right, look on the dates, so many days back. That's what it's going through and calculating it. Tick. looking good. Got that one in here. So now what we can do is we can take the COGS and drag that into the measure. So we've got COGS cash payment as well, and we'll just put the asterisk down beneath it. So we have it. So you can see we've got the middle parts of the control account. Excellent. Now I'm going to copy from the sales cumulative measure. So select the sales cumulative measure and highlight that and go copy. And then I'm going to go new measure and I'm going to paste it. And we're going to call this COGS cumulative. So that's going to mean that the calculator is not going to be on sales, it's going to be on cost of goods sold. Otherwise, that's okay. And then we're going to have another new measure and we are going to paste it in again. And it's going to be this time the COGS cash payment cumulative. And again, we'll need to change the calculator to something different. So what we'll do is go and edit it. It's going to be cost of goods sold cash payment. Isn't it good when you have these auto-completes in here? So we put that through, make sure we're happy with all that. It's doing the same thing. It's giving us the running totals up to there, as I showed you before. We don't need to put them in. And now we create yet another measure. We've got the two cumulatives now. We can now create our cost of goods sold opening payables value. And that's simply going to equal, well, it's going to be calculate, because we're doing it again out of context. And then it's going to be in here. We're going to take the cost of goods cumulative plus we're going to put in the COGS cash payments cumulative, comma, and then we're going to use previous day for the reasons we did last time, and this is going to require a date, and of course we always put in here calendar date. Close brackets, so it's going to calculate it for the previous day, so it's going to give us the closing balance for the day before. Check that that's all fine, all looking good. And now we'll create yet another new measure. We've done the opening balance. Now let's do COGS closing payables. So this one's a bit easier than the other ones. This is simply going to equal, still put it onto the next line. This is going to be the COGS opening payables plus the cost of goods sold plus the COGS cash payment. Looking good. Check, tick, all done. Right. Now we've done that, I think it's about time we put these in here. So we're going to move them in. So I'll put the COGS opening payable to make it at the top of the visualization, the closing payable after the asterisk, which is after the line. And we've got our control account again, except the numbers, the negative numbers are still with minus signs and they haven't got brackets. So we need to go and do our housekeeping again. It's frustrating, isn't it? So we go back to our model view and we go back to our actual control account measures and we're going to create a second folder. You recall we've already done 01 sales measures. The next thing we're going to do now is highlight COGS, COGS cash payment, COGS cash payments cumulative, COGS closing payables, COGS cumulative, COGS opening payables. Is anyone still awake? And we're going to create a second directory in here. So we'll highlight all of those. Go to the display folder and this one is going to call 02 and we'll call it COGS measures. So I do that, let's enter, that's put them all in there, and whilst we've got it selected, we'll go to format. Again, we're going to have to change to currency first. So we'll go to custom number formatting, and we'll put in the same number formatting we did for the sales measure. So that will put the brackets in for the negatives. Looking good for that, so we can go back to report view, and indeed you will see that the COGS cash payment has now got brackets. We'll now go to format, we need to make it red, we'll go to cell elements. We'll select COGS cash payment. Theoretically we should do this for all the numbers. We'll go to the font color again as we did previously, click on advanced controls and do the same thing with format styles, rules, and we'll do the normal thing of greater than or equal to min. It's a number less than 0, color it red. I'm going quickly because you've seen it once already. Let's add a sheet here. We'll put a sheet in and we're going to rename this sheet, not page 1. I'm going to call it income statement. Then I'll go back to the other sheet and I'm going to take the matrix visualization and copy the visual and just paste it into the new place here. So we've got it in here. And I'm just going to remove the values. I'll keep the asterisk, but I'll get rid of the other ones. So we've just got the line in there for the time being. Let's add a new measure. We're going to calculate our gross profit. And we're going to start off by going revenue equals sales. This is just because we want to call it revenue on the P&L, so I'm just showing you how we can just put another one in, add another measure, and I'm going to call this one COGS IS for income statement because I need to negate the cost of goods sold. So I'm going to go equals minus and just make it minus COGS. So I need it to be negative this time. So we're going to actually show revenue less cost of goods sold gives us our gross profit. Speaking of which, new measure, gross profit equals, hard to believe, but it's going to be equal to, back in here on the next line, we'll type in revenue, the thing we've just calculated, and then we're going to bring in our COGS IS, which is already negative, so we add them. So we're putting those through, and now what we'll do is we'll just go in here, and we'll just take in revenue, we'll drag it into the matrix, we'll then take in the cost of goods sold IS and drag that in as well, and then we'll take the gross profit and pile that in. So we've got them in, but of course the asterisk is in the wrong place. We'll just drag that down in the values section, the visualizations pane. Right, now what I'm going to do next, the gross margin slicer on the other sheet, I'm going to copy and bring that in. And it says that once I've done that, let's read that actual dialog box. It's worth actually having a look at here. It's saying, comes up, one or more of the copied visuals can stay in sync with the visual it was copied from. Do you want to keep them in sync? Yes, we do. We want to be able to actually change the percentage on one sheet to the other and it just flows through. So we're throwing the kitchen sink at this. And now what we can do is we can actually change the selections and it will actually filter through on both. And I noticed that we've got the negatives, so we need to go and sort that out. So let's go over to our field section and go down to our COGS IS sections. And I'm going to highlight COGS IS, gross profit and revenue. Before we put these measures in their own folder, we'll just move them from actuals to the financial statements measures folder. I can either click and drag them, or I can select them all and go to the home table here and move them from actuals to financial statement measures. I'm going to highlight COGS IS, gross profit and revenue. And we'll have another display folder, which is going to be called just income statement in this particular case. I'd already got a placeholder measure in here. Right, now that I've got the income statement in here, we'll then go back in here, click on Format, and go down to the negative section. We'll go to Cell Elements. It's COGS IS, which is negative, so we'll change the font color to on and go to the Advanced Controls. And our usual rules, if value greater than or equal to min, and it's a number, less than or equal to 0, make it red, yada, yada, yada. All looking good, we've got that sorted out. Now, theoretically, you should actually do that for the other measures, but you know what I mean. I didn't do the formatting in the model view, but I can just go to the COGS measure and copy the formatting from here, and then paste the formatting in for each of the measures in the income statement folder. So that's COGS IS, gross profit, and finally, revenue. Let's add another measure now, and I'm going to call this next measure underscore equals open speech marks, close speech marks. So I've got another of these random ones in, and it's just so I can actually create a row. So I'll put that in the control account measures one. So it's a bit like the asterisk one, but it actually is going to add a kind of like a space. Let me show you. When I drag this in, let's drag that down to values underneath gross profits. You see it's put in a row, blank row, so we can put things in here. Now, I'm going to format that. So I'm going to go to the specific column section, and I'll choose the underline. And I'm going to change the font color. I'm going to make it white, and I'm also going to go to the background color, and I'm also going to make that white. So everything's going to be white. I'm feeling all white at the moment. Then we'll apply that to the header as well, so everything goes, and you'll see it's just made everything invisible. So it's added a blank row into our matrix visualization. Now, why is that useful? Well, that means I can now drag gross margin in, for instance, if I wanted to. And yes, it's not formatted as a percentage, but you get the idea. It's actually left a row in here. So I could format that as a percentage and put it in if I wanted to, but for now, I'm just going to knock it out. Just wanted to show you. Now, I want to rename COGS IS, so I'm going to click on there and click on the shortcut menu and change it from COGS-IS to COGS. So that's where it's going to be in terms of how it displays. So you see now it still says cost of goods sold in there, though it's negative. But if we go back into the income statement, it's still called COGS-IS here. So that's a way that you can make it an appearance change, even if you actually have still got it called the COGS-IS measure. What we've now done then is we've created the first part of a P&L. We've got the revenue, we've got the cost of goods sold, the gross profit, and we can, if you think about it, we've also done the cash receipts, we've got the balances. We would put all those into the visualizations for the balance sheet and the cash flow statement as well. Obviously, I don't have time to go and build all of the control accounts, and I'm going to be completely honest, a lot of the control accounts are not as simple as the ones I've just shown you for revenue and cost of goods sold, but you can see how I've created the gross profit. And of course, what you would do is you would put the other calculations into the cash flow statement and the balance sheet for the receivables, the payables, etc., and the cash flow receipts and payments. That's what you would do, so the whole thing always balances. And that's what we've done. Here's something we prepared earlier. We've got a book out, as I say, coming soon, which actually goes through all this. And some of it is much more complex when we get to inventory, when we get to depreciation, and when we get to tax, because DAX, the Data Analysis Expressions Programming Language, is more complex. But you can see here, I have a P&L, I have a balance sheet, and I have a cash flow statement. I can drill down by product, by a customer, by geography, by whatever, if I've got the information in here. Now, I don't have all the information, but it doesn't matter. Look, I've got a slicer over on the left-hand side, gross margin, and as if by magic, we can put some more in. I can put one in also for year, and I can put another one in for the actual month name as well. So, ta-da! We've got these in here. I can pick for putting in for a different year, 2022, 2026, or decide to put them all back in, or go for a month and go for July. And you can see how we can change these things. How easy would it be, if we put product types in, if we had customer IDs, if we had geographies, if we had that data? Now, this example doesn't, but that's what we could do. For those of you who are thinking, my goodness, I think that's the first ever Power BI presentation I've seen where there haven't been any pretty charts and dashboards and things like that. I'm sorry. We've done the matrix visuals, which can be quite hard to do in Power BI compared to their visual counterparts. That's one of the frustrating things in here. But to finish off with, just to make sure that you don't feel too left out, let's gravitate away from what I've got here. I've got the cash flow statement showing at the second, and take a look at the visuals. And I've just put a couple of visuals together here in double quick time. I've got the net increase or decrease in cash held by year on one side, and on the other side I've got a pie chart showing the breakdown of the liabilities. And I've just created this from the actual data that I've created in the three-way integrated financial statements between the P&L, the balance sheet and the cash flow, just like you would with any other data out there. That's why I'm not focusing in on this, because this is easy. This is the trivial part. But I've got to finish on it, haven't I? Because everybody likes pretty pictures to finish with. So let's take a look at what we've got here. So if I look at the left-hand one with the net increase or decrease in cash held, I can expand all down one level in the hierarchy, and I can look at it instead here by the year and the quarter, so you can see how the cash flow changes, or I can go down to actual year, quarter and month to get even more of a breakdown and use the scroll bar, or I can slice it, and I can say, right, instead of picking all the years, let's just look at 2022, and you can see how it affects both the chart on the left-hand side, the actual cash flow, plus it's also got the liabilities on the other side of the breakdown. And we can, of course, resize these charts and play around with them. I mean, no one's saying this is going to win any awards as it is now, but the whole idea is just showing you how it comes together. And you can see for 2022, it's broken it down by accounts payable, interest payable, dividends payable, tax payable, debt and deferred tax liabilities, because that's what it happens to be in this case. But we don't have to have it just for that year. I can go back to the slicer and say, okay, I'm going to now select 2024, and you can see how it breaks down the detail. And of course, we can keep going on and pick other years. 2021 looks a little bit better, don't you think? But it's breaking it down. So we have this interactivity that can help us create our charts. So it's not just about the matrix visuals that we've got here. We can actually put in these other ones too, and we can put them on different sheets like I've got here, or we can have them just intermingle between the P&L, the balance sheet and the cash flow. Now look, this has been a whistle-stop tour and trying to give you an overview of the whole idea that financial modelling in Power BI, whilst not 100% simple, is possible. And the whole aim is, I think it's very exciting times, because with the this whole way of being able to show this data and being able to drill down on it by periodicity, by customer, by segment, it's just going to be pretty exciting. You can also parameterize things like the margin that I showed earlier. That's the power of Power BI. That's the power of building financial models in Power BI. Tricky, but well worth it if you get there. I'm going to hand over to myself again in a second, but as always, we've got to sign off in some way. So if you enjoyed this session, my name's Liam BASTICK. If you didn't, my name is Catherine Newitt. Thank you, Liam. Another informative, unhilarious session there. And we're talking there about Catherine Newitt, aren't we? So I think we've got Catherine on the line as well. So you see, I present, but I ask questions to someone else. I like this. It's working well. So welcome, Catherine. It's what, 10 to, what is it, 10 to 9 in the
10
UK.
to 9, yeah. So, good morning.
Good morning over there. It's a case of it's what is it? It's 10 to. I don't know where I am anymore today. It's 10 to 7 over here in Melbourne. I can't even remember where I am now. And the reason I brought Catherine in here, you're probably thinking, what's it? So Catherine and Oscar were running the whole shebang for Excel Virtually Global earlier, but Catherine had a heck of a lot to do with that video, more than you might think. It was her hands running it all because of my fun with Camtasia. But the thing is that Catherine had an awful lot to do with editing the book, and although it might have Jonathan Lau's name on the actual book, I would actually say these days there's more blood, sweat, and tears coming from Catherine than probably anyone else. And you probably can recite that book backwards now, can't you, Catherine?
I think there are chunks I can do, yeah, definitely.
So you were quite involved in this in terms of. One of the things Catherine and I are going to try and do is write a follow-up to this. It may take a couple of years. I wouldn't hold your breath on this, but the book that's come out is basic. It's showing the ideas of it because it's a new idea, and we would love people to go out there. This is not meant to be a marketing ploy or a loving or something here. It's meant to be that we tried our best to get the thing going, and we've got something that works. But there are regular questions we get about how can we put in parameters across multiple time periods? How can we actually forecast and sensitize and things like that? And we know more is required in the visualizations. And I think what's going to happen is Catherine and I are going to endeavor to try and do something in the next 2 years. And so Catherine's heavily involved in this. She's been very heavily involved in the book, and I wanted to say thank you to her on camera. So thank you for that. What I wanted to ask you was, what's your favourite bit about this whole thing? So, in terms of financial modelling in Power BI, I know, now let's just for the record, Catherine is not a financial modeller. So we're not going to ask Catherine any technical financial modelling questions, but you are the IT guru here in the team. So God help the rest of us, in terms of we know. But, well, what do you think is the most useful thing you did from editing that book and going through?
No difficult questions, he says.
No, it's meant to be just what you think. I'm not trying to put you on the spot.
I think getting to grips with DAX and really testing it to see what it can do. I think that was quite illuminating. All the MVPs coming together to solve the tax problem as well. I mean, that was just great, seeing how the community will actually support each other. So yeah, I really enjoyed that part of it. It was good actually really fighting with it for a few weeks and then finding a solution. It was and of course you came up with one of the solutions. We can't forget that, can we?
I came up with the solution. No, it's okay. No, special shout out there to Imke Feldman, who edited my original solution and came up with a better way of doing it. And also to people who did make good attempts in terms of Tristan Malher, Marco Russo and others that went through. And I'm sure there's other names I've forgotten in there. And I'm really sorry if I have, but I think I've name checked them all in the book. Yeah, absolutely. So it was very collaborative, and I think there was an exercise I did a long while ago where people were trying to work out how to hack a JavaScript table on the internet using Power Query and Power BI, where I think we had something like 12 people involved, and it reminded me of that task all over again. And it certainly felt like I was doing a PhD all over again there with trying to go through it. And I've got to say a big shout out to Tim Heng as well on this, because Tim told me to actually say, give up with it, you're not going to crack it. And that just incentivized me further. So thank you, Tim. I may have stopped otherwise, but when Tim tells me not to carry on, I think, yes, I must get an answer. So The other thing I wanted to bring you on for, I'm conscious of the time here, is what a lot of people don't know. This is the final session. We've just finished the whole thing, so we've had 32 sessions. We've gone over a day. Perhaps not the biggest event we've ever put on, but I think part of that is I think there's been a lot of events this year, and we're going to probably go for a different time of the year next year to try and make it bigger and better. But we were the first ones to be putting these things on here, and so don't forget that this is our 8th running. But somebody who's made my life a heck of a lot easier this year, because I dread doing these each year because I just run around like a headless chuck. And this year I passed on all that hassle to Catherine. So thank you, Catherine, because you've been involving and liaising with all of the presenters who've come on. And so on behalf of all the presenters that have come through, and you can read them all, I'd just like to say thank you, because your efforts have not gone unappreciated. I feel like this is why I should hand over the virtual flowers and chocolates or whatever to say thank you. Just say, where's my bonus instead? Yeah, wine, yes. Sorry, I've known Catherine many years. I should have said wine. You can tell I'm tired tonight. But I do lots of whining, if that helps instead. But thank you very much for it all, and for holding up the fort last night. And also, I don't know if Tim sort of is around. He's sort of been keeping this going. Tim's always the one that makes sure all the things stay on. And when I was having big Teams problems this afternoon, he was chasing the others round. And we got Sam to stay on. Poor Sam. Sam came on this morning to take over, and the poor soul is here again tonight. So Sam, thank you very much. Take a bow as well. He's here. He's behind the scenes. If you want to say anything, Sam, feel free to say anything. He probably doesn't, but he's welcome to.
He's typing instead.
No, he's probably not there.
Yeah,
but I just wanted to thank you, Sam.
Hi, Sam.
Yeah, so it's greatly appreciated. But I just wanted to say on behalf of everybody, so it's been a team effort here at Some Products as well as the actual MVP. So thank you very much to Enrique Del Buquerque, Talia Cow, Sam, who's on here at the moment, Sam Go, Catherine, we've just got here. There's Tim Heng behind the scenes, who started this whole thing off, and of course is a fellow MVP and presented the very first session, which seems like a lifetime ago now. Oscar Hagan, who's with Catherine over in the UK, and Tron Ewan, who I don't think she actually hosted at any point, but she's been behind the scenes checking things as well, and is our latest newcomer to the team. So thank you very much to everyone. There's probably other people I should be saying thank you to at this point. If I've missed anyone, it's because I'm an idiot and I'm too tired at this time of day. But I want to say thank you on behalf of everybody who is here. Catherine, I think you should have the last word, because you put so much effort into it. So yeah, maybe originally this was my idea, but like many, I'm not a completer finisher, and you had to go and herd the cats at everything this year. What would you like to finish with before we play that flaming charity video one more time?
I just really like to thank all the presenters. I mean, they gave all their time for free, and they were very friendly and perfectly happy to put up with any technical difficulties that I threw their way. So yeah, thank you very much for helping make it a brilliant conference this year, and hopefully see you all next year.
Yes, absolutely. And I'd like to echo that. I was going to leave that to last. I hadn't forgotten the presenters at all. If we didn't have any presenters, we wouldn't have any event. So thank you to everybody who put this in. We will put as the question that everyone asked is, when will the videos go up? Yes, check the access page on the Excel Virtually Global website. It will give you something. It's probably going to go into the YouTube channel, but it'll probably take a couple of days before we get them all up there. We will announce it to everybody. But thank you as well to everybody who has attended. Now, I know the numbers haven't always been great at certain times of the day, but we know we had about 2,000 attendees or so last year, and we're hoping for similar sorts of numbers over time here too. So please, 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 please donate. One of the reasons all the people gave it for free is we're hoping to actually do something for a good cause. We're not trying to force it down your throat which cause. You can actually donate to wherever. And so therefore, speaking of donating, perhaps the most appropriate thing here is to actually end up with that charity video again. Sam, would you do the honours for one last final time? And I think, Catherine, it's your voice that you're going to be sick of this time.
Oh, lovely. Hello, I'm Catherine Newitt. On behalf of Some Products, Microsoft, the MVPs and other technology experts, I'd like to welcome you to Excel Virtually Global 2022, all in aid of charity. Hopefully you've had a chance to look around our website, but allow me to draw your attention to what our event is all about. Microsoft's most valuable professionals, or MVPs, are technology experts who passionately share their knowledge with the community They're always on the bleeding edge and have an unstoppable urge to get their hands on new, exciting technologies. This virtual conference, now in its 8th year, presents Excel, data platform, and PowerPoint MVPs, together with other acknowledged experts from Microsoft and/or around the globe, to present, answer questions, and demonstrate the future of Excel and how it will make your life easier, personally and professionally. Most sessions will be recorded, so you may watch them later with downloads aplenty. There are no medals for staying up to watch the entire event live. So from your own favourite chair, bring a laptop, an inquisitive mind, and your sense of humour. Be prepared to learn heaps. And remember, it's for charity. The presenters have all kindly donated their time to make this as informative and entertaining an event as possible. Therefore, we would be grateful if you could make a donation to a charity of your choice and advise us, preferably in US dollars, how much you pledged, as we would love to keep track and keep you updated. This is an honesty thing. Whatever you do will simply be between you and your conscience. If you would like to let us know what you've donated, then please use this QR code or the bit.ly link underneath it. The link is case sensitive and it's bit.ly/EVG 2022 charity. Thanks for listening and please enjoy Excel Virtually Global 2022.
This has been Excel Virtually Global 2022. Join us again in 2023 when we'll be back, bigger and badder than ever, I'm sure. So for now, thank you very much. We'll leave you with the final slide and we'll say safe travels wherever you are. Stay safe, stay healthy, stay happy. From all here at Some Product, from all the presenters, thank you very much. Bye for now.